And there you go. All right. So my goal today is for everyone to understand how an annuity works at its basics, understand how it can help somebody, and then just the process to go about how to get one sold when you first start. Right. So first and foremost, what is an annuity? An annuity is super simple. It's essentially like a interest credit. It's interest bearing savings account. It's a savings account because you can't lose any money in these accounts that were licensed to sell indexed annuities. And it grows with the market, so it actually bears interest. So you can grow, market interest with these products. They grow like an IUL, for example, where it's indexed when the market's doing good. We're actively earning cash in the policy. It's credited the interest every single year. And then on the flip side, when the market's negative or where you're not performing in that market or whatever it might be, if it's negative for whatever reason or less than zero, it would be a 0% floor. So we can't actually lose anything in that cash value account. So 0% floors because they're indexed, right? If there's things like variable annuities, don't worry about those. We're not licensed to sell those. And really, at the end of the day, an annuity, the whole goal with the annuity is really just one of like two or three things. People, you're going to find the biggest reason that people actually have to buy these products is super simple. Here are the problems that these, can actually solve for people. So we're talking about these being a interest bearing savings account. So it's a account where we can earn significant market growth, zero risk on the downside. How would that help anybody? If people have, if people are approaching retirement and they have money in accounts that they can lose money in, do you think that they can afford to lose 10 to 20% of their portfolio or of their retirement account if we come into a dip and they're 55 years old or 60 years old? Probably not. I mean, they probably want to retire at 60, 65, 67, 70 at the latest. If they got a late head start. But at the end of the day, if they lose 20, 30% of their account in a recession or whatever that might look like, they can't really afford, to do that because they don't have the time to build it back up. So these accounts are going to help individuals take their money out of risk. That's a huge, huge problem that we can help people. If they have money, if they're over leveraged, if they can't afford the risk that they're bearing, we can help them remove that money from risk. If they have a certain amount of money sitting in a 401k and that 401k, is linked to whatever index it's attached to, and that index is not doing so good this year, we're down 10%, down 20%. We enter a recession, we have another 2008. In 2008, the housing market took an absolute shit and people lost 30, 40, 45% of their money overnight. And it was very devastating for a lot of individuals. People that had money in these types of index accounts were smiling. They did not care. They had a 0% interest growth that year. They didn't lose anything, they didn't make anything. But not losing something is not gaining, not losing, having a break even year is much better than going negative 10, 20, 30%. Like for example, I had a client with a TSP, a thrift savings plan. It's like a 401k when you're involved with like, it's like the military or government jobs. But with that TSP, I was going to help him out last November, roll over, a large amount of money away from his TSP into a indexed annuity. His wife kind of talked him out of it. He ended up losing $40,000 since the last time I spoke to him. And then somehow his wife convinced him again to back out of it. So let's see how much he loses this time. But the point is, like, we can help people avoid that mistake of losing 40,000 in 6 months, 100,000 a year in a year, whatever it might be. It's called percentage based. But the problem that we're going to be able to help, number one, is people with risk that they can't afford to really take on. That's really going to come with their age, right? Because most people have a higher risk the younger they are. They can tolerate more risk. I can tolerate a lot more risk because I know I'm not like, looking to retire here in 5, 10 years. I'm going to be working for a long, long time. So I can afford to make more mistakes. I can afford to lose money. But if you think about someone 55, 50 plus, I mean, just to work in a traditional job, typically they're not looking to afford to risk another 10 to 20 years of their work. So that's problem number one. They have risk they can't afford to bear. Number two is that they just have money underperforming or non-performing assets. CDs, it's certificate of deposits. Basically, these are just accounts where you put them in the bank. They say, hey, I'll give you a 4 or 5%, 3 to 6 to 9 to 12 months. It's locked up for that period of time, and then you can take your money out after that period of time. Those are awesome if someone doesn't know it, is really out there for themselves. They're just looking for a fixed rate. Some people are. But what would if we could help them because their main goal is just, hey, I just don't want to lose any money. I get I can make more elsewhere, but I just don't want to lose anything. That's their underlying goal. So they're okay with the underperforming or non-performing assets that they're stuck with because at the end of the day, they're just like, well, fuck it, it's better than nothing, and it's better than me losing something. So that's problem number two of who we can help. If someone has money in underperforming or non-performing assets like CD accounts, fixed accounts, just a high yield savings, even just sitting in their checking account, not doing absolutely anything. They have money laying around that can be utilized to help them, but they're just scared, right? They haven't found the product of the person that can help them. And honestly, those are probably the two situations you're going to be focusing on the most because an annuity is going to be easily able to take care of both those things. Just I can guarantee someone, hey, we cannot lose a thing, like absolutely impossible to lose anything. And then the second thing I could do for you is actually help your money grow with significant upside potential. And if you can guarantee someone those two things, that's pretty huge because I don't know any other products out there that you can guarantee those two things where, hey, your money's gonna be attached to high yielding market growth as well as 0% floor, can't lose anything. And it's gonna grow for you tax deferred. There's pretty much zero fees. There's little to no fees with annuities. These are huge upside. Um, and then really with that, that's like the biggest selling point with these products. It's not a very complicated thing to sell. It's just like, hey, do you have a problem? Hey, do you have any money laying around that you can't afford to lose? And how you're going to actually find this money is like how you might be thinking like, how am I going to find out if my client has money sitting in an old 401k or things like that? I'm here to talk about their life insurance with them. Like, wouldn't it be kind of weird from start asking them how much money they have laying around? It could be for sure, but if you do it the proper way, it's not going to feel so weird. And how I've found the best way to go about it is when you're just talking to them about like what their existing life insurance looks like, you're going to ask them, okay, awesome. Like besides that one policy you told me about, is there anything else that might be acting as life insurance for you, like an old 401k, CD, savings account, something that could pay out to your family if something happened to you, God forbid? Anything else that would pay out? And you give them a few examples, yeah, like the 401k, savings accounts, whatever that might be, even say annuity, and see what they have. Just take note of it. Yeah, you have a 401k. Is that with your current job or an old job? Write it down. Okay, awesome. You said you do have you have an old TSP that you had when you were in the military. You never did anything with. Okay, awesome. I'll write that down. And then like really when you're coming back to it at the end of the conversation, you have them about what their life insurances. Because I mean, the life insurance leads are the best leads for annuity leads. You could buy annuity leads, but why do that and spend a whole, boatload of money on those when you could just continue buying the same leads you are right now, sell them a life insurance policy, and then say, "Hey, Jessica, it's been awesome helping you today. Remember how earlier you told me you had some money sitting in that 401k? That would definitely pay out to the family if something happened to you. That is awesome. If I was able just to show you a really quick strategy that we could take that money out of risk of market loss, because I mean, let me ask you this, Jessica, how much of that money can you afford to lose, or how much money of that would you want to lose? They're gonna say, well, I don't want to lose any of it. Okay, awesome. Well, if you don't want to lose any of that money, would it make sense for me to show you a really quick strategy? I could, we take that money out of risk completely and even have it participate in significant upside growth. Yes. Okay. Awesome. I mean, let's take a look at it. Let me see what my calendar looks like tomorrow. I could fit you in at 4 o'clock. We just hop on the same Zoom call or a Google Meet. I'll show you my screen here, and if the numbers make sense, awesome. If they don't make sense, I mean, it's no stress off my back. I'm just here to help. Like the easiest way to set up an annuity appointment, and you might have no idea like how to write the application, how to write the illustration, or like even details on like every level of it, and that's okay. You just have to get someone like myself, Wyatt, Cody on the phone, someone that knows more about the annuities that have sold them. That you could be like, hey, yo, Gersh, are you going to be available tomorrow at 4 o'clock? I have a guy that maybe has some money sitting around an old 401k. He might, I just don't know what to really do. But I set the appointment. I told him I'd get my annuity special on the phone with him. Awesome. I'll ask you a few questions. I'll hop on that call with you and we're going to close them together. And then you're going to see the entire process because my goal is to be able to help everyone do this on their own. I'm not looking for everyone to be dependent on an annuity specialist for the rest of their insurance career. I just want people to actually learn how to sell these the right way and not have to fumble 10, 15, 20 appointments just because you have no idea what the fuck you're talking about. But if you can see the whole process get done right in front of you, the application submitted, illustration created, illustration explained to the client, understand the pros, the cons, like actually go through that, you're going to be able to make your first sale and get paid a boatload of money off that. Invest in more life insurance leads, continue having this conversation and perfect this practice. The starting commission on annuities is 5.75%. So if you sell $100,000 annuity, you help someone roll over 100,000 they had in an old retirement account, or they just rented a little bit of a lump sum of money. They have, a few hundred thousand. They want to put $100,000 away that they just don't want to lose no matter what. They don't really want to touch it. They want it to grow for them. Awesome. We could do that. That 100,000 annuity that you sell, you're going to make $5,700 off of that. Non-chargebackable direct deposit. And like that 5,700, that's I mean, for a lot of starting agents in their first 3 to 6 months, it might be like most of your monthly profit. You might be making 10K a month, awesome, but you're spending four, and it means you're profiting six. What if you could like do your entire profit for the entire month in one deal? So like these products, I just want you to understand, they have a huge place in your business, and I want everyone to understand how they work. I just want to make them super simple. I don't want to get into like all the nitty gritty details of these policies. I just want them to be something like, oh, well, if that's all it is, then why aren't I already selling them? That's what I want you to be thinking. I don't want you to be thinking like, fuck, he's just trying to dumb it down and it's really a whole lot more to explain. No, like, they're genuinely extremely easy policies to understand. They have surrender charges during a certain amount of years. So there's 5 year annuities, 10 year annuities, 15 year annuities, 7 year annuities. All the year really means is the amount of years it has a surrender charge, meaning that if they take out more than a certain amount during that first 5, 10, 15 years, there's a surrender charge. It depends on the product, it depends on the carrier, but the whole goal is if someone's putting money away into this product, we don't really want them touching it so much anyway, but they do have a good bit of liquidity. Right. So don't be telling people, hey, yeah, we have a product that you can put all your money in and take it out tomorrow, no big deal. I mean, there is surrender charges. So I'm gonna show you guys an example here of how an annuity could work and even just go through the product guide just to show you like really quickly what those product or what those surrender charges might look like. That way you have a better grasp of like actually explaining this to a client really quickly. But I want to answer like any questions I have. I know there's been a couple things in that chat I haven't really been paying attention. Yeah, if you have money in a 401k, do you do a 1035 into the annuity? Yeah, so if we have an old 401k or something that they're not participating anymore, we would be able to do a 1035 exchange directly into the annuity. So it'd be a tax-free, penalty-free rollover. That's kind of the beauty of it. Like if someone has money in a 401k, their alternatives is put it into an IRA where it still is risk bearing. They can just withdraw it, which they have to take taxes Capital gains taxes, they have to pay those. Income taxes, they have to pay those because they're inherit a lot of money. They also, if they're under 59 and a half years old, they have to pay a 10% early withdrawal federal penalty tax. Basically, they're just paying 10% to the government for touching their money early. So we could avoid them having to take 30, 40 plus percent of their money, just taking it away, giving it to Uncle Sam. If we could do a tax-free, penalty-free rollover into an annuity. Crypto stock investments, no. So they'd have to actually withdraw those, Jay, just because those are unrealized gains. They have to realize the gains first. But that's a good question. But yeah, anything crypto or stocks like these have to be funded with uh, either pre-tax or post-tax. But when it's pre-tax money out of like something like a crypto account or a stock account, we would actually have to withdraw those first into cash. So they have to pay those capital gains taxes first, or the income taxes, or whatever it might be. I
Is
wish
there a,
that'd be a awesome selling point for a lot of people with a lot of money.
is there an average compounding interest like with the IULs that you
So,
can say in the pitch or so?
like for the product I'm going to show you guys, the worst performing 10 years we've ever had was 333% growth. Worst 10 years, right? So that's the worst 10-year stretch we've ever had in terms of performance. The best 10-year stretch we've ever had was 850%. So like really anywhere in that mix is awesome. That's a big, those are two extremes, right? But anywhere even on the lower side, like even 300 to 500% in 10 years, occurring zero risk, people are gonna be pretty inclined to see what the fuck you're talking about. All right, so I'm gonna share my screen here. Let me pull this up and log in. But does anyone have any questions at all? I mean, there's really not like stupid questions. It's like I just want you to
Yeah.
understand how the annuity works.
Yes. So I just want to kind of reconfirm, I guess. So when I'm pitching, IULs, I could say, 6 to 12% average, but just for example here, I could say anywhere from 3% to 500%.
Really,
And
that's a 10-year stretch though. That's over the
in
course of
the
it
10
was
years. Okay, got you.
333% to 850% in 10 years.
In 10 years.
So
Okay,
like
got you.
with these, I wouldn't even necessarily say like an average. I would just be like, hey, like, these are not really something we're looking to put a boatload of money in and start using immediately. Like let's say like an IUL, because they might want to start borrowing from that money ASAP. You can't borrow from an annuity. And in an annuity, your money grows for you tax deferred. You still have to pay taxes on the money when you take it out. So, like an IUL, you can have tax-free retirement income. You could have tax-free withdrawals in the form of loans. So you can't take a loan from an annuity. That is a big difference between the IUL and the annuity. There's also, guys, there's no health underwriting for annuities. Like that's huge. There is no health underwriting. So it's not you're not going to worry about Billy Joe having cancer and getting approved for that $1 million IUL.
Is there an age limit to annuities?
Um, I would say really like no. It goes all the way up until like 85 for that's like
Okay.
NLG. But no, I think NLG will do it from anywhere from 0 to 85 for any of their annuities. But I think
Does it
Athene
lose
is like
benefit
doesn't lose
like the older you are?
benefits. No, it doesn't
Okay.
lose benefits. I think the commission might be different for like really young people versus really old people,
Okay.
but like
Thank you.
it doesn't affect the client or anything. All right, 1 second. Let me just get this code from Athene. All right, any other questions at all? 'Cause those are good questions. Thank you, Jay and Ramel.
Hey, Gersh, just a comment. One of the other advantages of an annuity is predictability when you're budgeting for retirement, because it's a, guaranteed stream of income versus, your 401k went up this year, then it went down next year. It makes life easier for retirement.
Sure, I did forget to mention that, or I kind of skimmed over that. But with these products as well, we can help people solve another problem, which is they're looking at not outlive their money. They're looking for their money not to outlive them. What I mean by that is that a lot of people might be living very frugally in their retirement because they're scared that they're going to run out of money. And then people also might be maybe overspending on their money, or now they outlive their money. They're like, "Fuck, I ran out." So you can run people that are like, "Dude, I don't want to run. I do not want to run out of money when I'm 80, 85, 90. Like I can't afford that." So when those people have those concerns, we can solve that problem as well with a guaranteed lifetime income. And like what I mean by guaranteed is like doesn't matter if the stock market's negative for the next 20 years. It doesn't matter if on paper you run out of money. Like the insurance company will guarantee you X amount every single year until the day you die, no matter what. Even if you live till 120 years old. So people looking for guaranteed income while they're, when they're retired, we can help them with that. I have a lady that's looking to do that same exact thing. It's her husband's old pension and it has a little over a quarter million in there. She wants to make sure if something happens to him that she can receive a guaranteed stream of income for the rest of her life. So we're going to write the annuity and then they're both going to receive that income. And when he passes away, the income is going to actually keep paying out to her. So it's going to be like a joint annuity. So you can do things like that, which are really, really awesome because her husband has like Parkinson's. They're both in their 70s. She just wants to make sure that his money's protected, that she's protected, all that. So I'm going to be able to help her out in a really, really big way. So I'm going to share my screen and just go over kind of like what I was talking about more so at the beginning because those guaranteed lifetime annuities, we're going to look at a different type of annuity. It's still a fixed index annuity, still with a theme most likely. But I'm going to focus today just more so on the performance side, just to make this like pretty crystal clear. I don't want to confuse anybody. Like I want people actually being able to pitch this like today and be like, at least just the two main benefits. Hey, I can help you not lose any money. I can help you grow it. So performance elite. Let me share this. Okay. All right, everyone can see my screen, yeah? Perfect. Thank you for the thumbs up. All right, so we're talking I don't know, we're talking to Billy Bob. He's 55. He has some money in an old 401k. He's just been letting it sit there. Lose money, make money, he doesn't fucking know. He hasn't looked at it in 2 years. And you help him sell a life insurance policy. Congratulations, you help him get whatever it was, 50,000, $100,000 IUL, America Mutual, whatever. At the end of the call, when you're solidifying, and this is obviously after you ask him what else he has in life insurance, so he has an old 401k, right? And you can even ask them like to get the values of those, like, hey, just so I know like how to help you the actual best, like what you would actually even need in terms of life insurance. What's a rough estimate of what you have sitting in that 401k? And then like that's where you might be able to get a rough estimate of like a value and like bring that up at the end of the conversation. Now you're solidifying your deal. Yeah, hey Jamie, we got you that $100,000 IUL with Americo, and that is fantastic. So you got fully approved. Congratulations. The living benefits are going to be in place for your family upcoming on the first of next month. The death benefit, there's no waiting period for that. It's effective immediately. I'm going to be your agent for the rest of your life. So if anyone else gives you a call saying anything else differently, that they're my manager or a policy service director, anything like that, tell them to kick rocks and go suck a chili dog. If it's not coming from my name and my phone number, just tell them to get lost. It's not, if you're ever confused, concerned, anything you might see, just give me a call. I don't care if it's 3 a.m. on a Saturday night. If I'm up, I'm going to answer the phone. So after you solidify, and then real quick before I let you go, Jamie, you mentioned the fact that you had that old 401k sitting there that you haven't really done anything with. Let me ask you, with that money that's in there, how much of it can you afford to lose? They're gonna say like, well, I guess I don't want to lose any. Okay, awesome. Well then, let me ask you this: if there was a really easy strategy I could show you to even guarantee we can never lose even a penny in there, while also participating in some significant upside potential, like would that even make sense for you to look at, considering it'd be a tax-free, penalty-free type of rollover? Like, would that even make sense for you? And you kind of put it that way just to be like you don't really give a shit whether it does or not, because you're just here to help, just because you don't want to come off salesy, especially when you're talking about like bigger amounts of money for them. Like, hey, you have $100,000 sitting in there. Like, how can I get my fucking hands on it? You don't want to come across like that. So it's like, yeah, like would it even make sense to look at a strategy for you where we could, guarantee we never lose a dollar no matter what, as well as to earn some significant upside potential, tax deferred, and actually, I forgot to mention this as well, but like what I like to throw in right there when I'm like trying to set that appointment with them is like, yeah, like would it make sense for you to guarantee never lose anything, have significant upside potential, and then even God forbid when you pass away, you have that much more money paying out to your family tax free. When you pass away and you hold an annuity, that annuity is going to pay out to your beneficiary tax free, like a life insurance policy. So they all have a death benefit. The death benefit isn't a separate amount of money attached to it, so there's no cost of life insurance. It's the money we put in there. The accumulated value is the death benefit. So if you put 100,000 and it grows to 500,000, now you have a $500,000 death benefit paying out to your beneficiary. So like in the application, we attach a beneficiary, contingent beneficiary, whatever it might be. Those are the individuals that are going to receive that death benefit when the annuitant passes away. Does that make sense?
So is it essentially like a life insurance policy for your money? Like and kind of in an off way, I guess, like you're putting it's a tax deferred way to roll it over into an account that'll protect what you have essentially.
I like you, JT, bro. That's a good way to put it. I like to put these like portfolio insurance, but life insurance for your money's fucking sick. Yeah, I like that.
Okay.
I like to call it portfolio insurance because it's like you might have X amount of other accounts performing in the market, this and that, but when everything takes a shit, what are you gonna have that's just guaranteed not to lose anything and still holding strong? An annuity, an IUL, whatever it might be. But yeah, that's a good way to look at it, bro. So I'm gonna share my screen here just to show you guys. Right, we have this situation. That person at the end of the conversation is like, well, I guess it would make sense for me to look at something like that. Yeah. Okay, awesome. Well then let me just double check with my annuity specialist here just to make sure he can hop on with us. But what time for you tomorrow? Yeah, what time tomorrow works for you the best just to hop on a quick 15-20 minute call and review that information? Oh, tomorrow doesn't work. Okay, I got you. Well, hey, what's today? Monday? How about this? Does anytime Wednesday work for you? Like I aim to get that call immediately in the next like 72 hours. I'm not trying to push that out for 2 weeks and have them forget about it. Like I actually want to get this done. So in the next 72 hours. If it's early in the day, I might even push for later that day. If it's like 8 o'clock and I'm talking to them last thing, I'll be like, hey, I'll take it easy on you tonight. What's a good time to give you a call tomorrow? So set that time, reach out to someone like myself. I will hop on that call with you, break down their situation for them, break down their financial goals. We'll go over this illustration with them on like a Google Meet or a FaceTime. I actually show them these numbers. But just so you guys can take a look at it, I'm going to look at here, let's say 150 grand. We're looking at a 7-year performance elite. So Athene Performance Elite 7-year annuity. And I just want to show you really quickly the guaranteed illustration. I like to show the guaranteed illustration first because this is even if we enter a nuclear holocaust. Like I'm talking most most states or countries are underwater. Like stock market doesn't exist. They guarantee this is what it'll look like. This is assuming zero market growth. So our accumulated value is 150,000. That doesn't change until we start taking RMDs on the policy, which I'm not going to get into right now. I'll do that a whole separate week because RMDs are just required minimum distributions. Once you reach a certain age and you have a product that's tied to, or you have a product that's pre-tax, like it was funded with pre-tax dollars, like a 401k or an IRA, the government IRS makes you take out a certain amount every single year out of that product because they can't just, they need to get their taxes somehow, right? So RMDs is how they do that. Once you reach like, it's usually between 73 to 75. Once you reach that age, you start taking required minimum distributions. That's pretty much all you'll need to know. But let's just say before that, we have this money growing, or we have this money sitting in the account. It's not growing at all. This minimum guaranteed contract value is important though, because whichever one is lower between this accumulated value, I'm sorry, whichever one is higher between accumulated value and minimum guaranteed contract value, whichever one of these two is higher, is what's going to pay out as a death benefit. So after the first 7 years, we could see that this minimum guaranteed contract value is actually over 150 grand, and we didn't earn any interest. This is like zero market growth every break even year every single year. Nothing's doing anything. The minimum guaranteed contract value will actually go up until we start taking RMDs. It'll start going down, but it'll get to a point where even though we had zero growth and this person might pass away at 74, 75, they would receive their family would receive $185,000 death benefit, even though the market did nothing. Like guaranteed, it can't look any worse than this. That's why I say, like, hey, I can guarantee you we can't lose a single dollar, no matter what. Now I'll show them like what it can actually look like more expectedly based off actual performance. Show them the worst 10 years. The worst 10 years we've ever had back to back in this strategy. We would have taken your 150 grand and turned it into $500,000 in a span of 10 years. Now, if you look at the best 10 years, again, these are two different extremes. So I'm not saying either one of these outcomes is likely to happen again, but I want to show you both extremes. That way exactly like what to expect on the upside, the downside, and like what's more realistic in the middle. And then if we're looking at the best 10 years, we could have taken that 150,000, turned it into 1.275 million. That's not half bad. Not half bad at all. And then like the most recent 10-year performance, this is kind of what that would look like. Kind of every year is what it's assuming a best 10. This is the most recent 10 years, kind of just going back to back. So most recent 10 years, we would have taken, if you actually would have put 150,000 in 10 years ago into this product, this is what it would have looked like, almost 600 grand. Again, the whole time you're incurring zero risk and your money's growing for you tax deferred. God forbid you pass away, the death benefit 598.197.44 pays out to a beneficiary. These products are pretty fucking sick. You can make a lot of money in these. You can make a lot of money selling them. You can help a lot of people take their money out of non-performing assets, underperforming assets. Help a lot of people get their money out of risk and still help their money grow for them. So I absolutely love these, and I just want to make sure no one thinks that they're too complicated to actually work on. Everyone can see my screen, or am I just tripping? Okay.
No, we're
Okay,
good.
bet. All right, awesome. Now, where did my fucking thing go? All right. Any questions at all?
What do the commissions look like on annuities?
Yeah, that's a good question. So starting commission is 5.75%. So again, you sell $100,000 annuity, you're making 5750, $5,750 direct deposit. And these products are 99% non-chargeback. Well, the only time you can get a chargeback with these, I believe, is like if the annuitant dies during the first like 6 months to a year, maybe.
Hey Gersh, I dropped a question in the chat and I also have another one. Can you free look an annuity?
No. I believe they might have 30 days to like maybe get their money back, free look, but that's what I'm saying. Like, they're like 99% non-chargebackable because like you might run into the situation where someone's wife is like, "Hey dude, why the fuck did you make such a good smart investment, you fucking asshole?" And they just berate this guy's poor fucking guy who's just trying to help out his family. Berate the guy and maybe he wants to take his money out. I believe there might be a 30-day period where they might be able to do something like that, but it almost never happens. And then what was your other question? If you're let's say widow with a pension from their former significant other.
Yeah, pretty much like how would you go about introducing the idea of an annuity in a situation like that? Like how would you go over like the risks of keeping the pension where it's at and, some of the upsides of being able to do a rollover if it's available for like a one-time lump sum?
So like same situation. It's like, hey, well, Mary, I mentioned, like you mentioned earlier, you have that pension laid around from your husband that you're receiving maybe a little bit on, or you're planning to receive a little bit on here in the next few years or whatever it might be. Like, would it make sense to even show you a strategy where I can actually help you take that money and have it grow for you with zero risk of losing it and even guarantee a higher stream of income for the rest of your life? Would it make sense to do that? And like they'd have to be brain dead for it not to make sense. Because like those are all like no-brainer benefits. So it's like, hey, Brandon, like you're telling me this, hey, Brandon, would it make sense if I could show you, a simple strategy where I can help you actually grow that money for you pretty significantly, guarantee we never lose it, and secure a higher guaranteed stream of income for the rest of your life? Yes, awesome. And then I can even make sure the money pays out tax free to a beneficiary when you pass away. So you have more life insurance. And how do you go about rolling over a company's pension as opposed to an IRA or 401k? What would be the advantage of doing a move like that? So sometimes when you take out a pension, they're going to hit you with charges or like fees. The most important thing is like finding out what their actual surrender charge is, like how much cash is built up in that pension, because pensions don't really grow necessarily. It's like you're just putting some money away every single month into this account, and then you're going to get paid out a certain amount depending on how many years you put away this money or how many years you work with a certain company. Sometimes you don't even have to put money away. So like it depends. You have to actually call that pension holder, call that company up with the other client on the phone and just ask them questions. Like that's what it's going to come down to. Like, hey, I have my client here, Brendan Yeager, on the phone with me. We just have a couple questions about his pension he has with you guys. And then the operator is going to say, hey, Brendan, do I have permission to speak with this guy on the phone? And the guy's going to be like, yeah, you do. He's my life insurance guy. Don't worry about him. So that's how I'd go about that. But basically the same process. What would be the advantages of doing a move like that? Kind of like what I mentioned. We can help them secure a higher guaranteed stream of income. We can even have their money grow for them now. And we can make sure we don't lose it even if we are having some upside potential. But yeah, Brendan, I would just shoot that, find out who holds that pension, shoot them a call with the client on the phone to start asking questions. What's the surrender charge? How much would they have? They took everything out today. Can we do a rollover? What is their expected income on this policy? How much are they currently receiving? How long would this last them? Start asking questions.
Are there special trainings you have to go to sell annuities?
You do have to complete best interest and suitability trainings for a few different states, like California, Texas, for sure have those trainings you need to get done. And I can have them uploaded into the chats this week of like just where to go to get those done.
Okay, but if you're not in a state that requires that, does just a general life insurance, um, like life
I,
insurance
I
license
think you
allow
still need to
you?
get the best interest and suitability training done.
Okay.
I'm still it's really quick though. I don't think it even costs anything. And then Kareem said, how would you compare the performance of an annuity to an average 401k slash IRA? Probably pretty similar. Maybe even maybe over the long term it'd be better with an annuity because we're not taking those years where we lose anything. But like they're pretty similar. The only thing is like with the annuity right now, at least the Performance Elite product, this Performance Elite 7 I was showing you, the participation rates are pretty damn high. Actually, I forgot to show you that. Let me show you that right now. Let's go back here. Let's go to products. I'm gonna go to Performance Elite 7. Awesome. So let's take a look at it. The interest crediting strategies are here. These are the participation rates. We're going to use the strategies with this 1.25% charge because they have a hell of a lot higher performance rate, higher participation rate. So they're going to perform a lot better and eat up that whatever charge is. So let's say, for example, the 1 year point to point strategies. We're going to do a diversification between the 2 year point to point and the 1 year point to point. For anyone that doesn't know what that means, the point to point is basically like, hey, we're going to say January 1st, 2025. That's point one, all the way up until January 1st, 2026. Any type of change in the market with any of these indexes, so the S&P, the NASDAQ, the BNP Paribas, AIGO, whatever it is, whatever the change is, what you get credited times the participation rate. So if we had a 10% growth in the NASDAQ from January 1st, 2025 to January 1st, 2026, between those 2 points, we had a 10% growth. It'd be 10% times 150%. So it's like basically move the decimal point over two, and it's 1.5% or 1.5 times whatever the NASDAQ performs at is what you get credited. So if we earn 10%, you'll get credited 15. If the S&P performs 10% with these participation rates, you'd get credited 1.15 times that. So 11,500. So we could actually earn a lot more than traditional accounts because of this leverage we have in the market with these high participation rates. And also, there's no fees with these policies. There's no like management fees. I mean, there's not going to be like random money taken out of their account. These are the withdrawal rate schedules. So let's say, actually, I want to show you first. We have 10% free withdrawals with these policies. So if someone has if that person, Billy Bobby, puts in 150 grand in the first year, and then year two, he's like, fuck, dude, I need some money. I have nowhere else to take it from. How can I go about this? He's going to be able to take out 10% of whatever his accumulated value is. So if we go back here and look at a quick view, just even most recent 10 years, let's say by the end of year one or end of year two, he has 168K in here now, 168.225. He wants to take out up to 10%. He could take out up to 16.8 thousand with no charges. Any amount he takes out over that 10% free withdrawal, there'd be a charge on. So let's just say he has 100,000 there just to make it really simple. He takes out 10%, that's 10,000. Any amount he takes out over the 10,000, there's going to be a 9% fee on. So if he takes out 20,000 total, that first 10,000 was free, no charges, but that next 10,000, there's going to be a $900 fee on it. 9%. And that goes down by the year. So by year 7, there's only a 4% charge. Then year 8 plus, there's zero charges for the withdrawals. But I mean, that's basically it. Here you can see here the terminal illness waiver. If they're diagnosed terminal, there's no charges. They can take out all their money year one. If they get confined to a nursing home or qualified care facility, they can take out all their money. The death benefit is the greater of the accumulated value or the minimum guaranteed contract value. Really, really simple stuff. But yeah, this is what the growth is actually based off of, these strategies and with these participation rates with the charge on here. Does that make sense? Perfect. All right. I think I see some more questions here in the chat. Do you ever get people saying that it sounds too good to be true? And if so, how do you respond to that? And if also, is there a minimum lump sum need to put into an annuity? So I'll answer the first question first. I've got people that say this sounds too good to be true, of course. I tell them it's like, well, like here's the thing is I'm not licensed to actually lose anybody money. I'm only licensed to help people preserve their money and multiply it. I don't hold a license to sell you a product that you can bear risk on. So the only things I'm licensed to even, talk about with you are things that you can't lose any money in. So I'll show you here the actual, product guides. I'll show you the information right here, telling you, like showing you what I'm telling you is true. But if you think it's too good to be true, then I mean, you have one of two options. You're going to hold yourself back from an awesome opportunity, or you're going to be able to actually like take advantage of a pretty damn good opportunity, depending on how you go about it. But like, I'll just show like, hey, like, no worries. Let's just hop on a quick call here. Hop on a quick video call. Press that green button. If they're on FaceTime them right there. Send them a Google Meet link. Hey, go to your email. Click that join meeting link, whatever it might be, and show them the actual illustration. Show them the product guide, and you'll be able to actually they'll be able to see it visually, so they can't tell you what you're looking at right now. You just logged into your portal, show them this information. Then what are they going to say? Oh, those are fake. All right, whatever. The minimum lump sum for Athene is 10,000, but you could do something with even National Life Group for as little as $100 a month. They have a flexible annuity. How do you explain the initial charge that shows as soon as you pay into the annuity, you pay 150K, your account value is 133K. We just told them you can't lose money. So they can't lose any money unless they plan on just like withdrawing all their money. But they have 10% free withdrawals out of the account. So they don't actually have to pay any charges unless they take out over 10% during that annuitization period. So I mean you're gonna explain to them how the 7 year period works or the 10-year period works, and they're gonna have to understand that's just how the policy works. I mean, there's not really much we could do to stop them from withdrawing all their money and losing it. That's kind of their own fault because they signed up for it and we told them how it works. So if they want to withdraw everything they have in the policy and take the surrender charges, and that's just what they're gonna have to do. But like for example, if you get me on a call with somebody, I'm gonna explain to them exactly how the surrender charge works, the free withdrawal period, the charge rate schedule. I'm gonna go over all of that. Like I mentioned, I don't think it makes sense to turning everyone into an annuity professional in one phone call. But I think if you actually start pitching these products and you understand how they work basically, you can get someone that knows more about them, whether it's your upline or someone in your own hierarchy or myself or whoever it might be. You can have someone hop on the call with you, explain how it works in detail to the client, and then help you write that policy to the client, watch the application, all that, and actually do it right. And then you're going to learn how the whole process works, and hopefully you can do it on your own the next time. Does it have to be a 401k that is no longer being contributed to, or can someone roll over what they currently have? If it is an active 401k, typically we can't touch it unless they allow in-service rollovers. If they don't allow in-service rollovers, we can't touch it if it's actually active. But once they separate themselves from the job, whether they get fired, retired, or quit, we can touch it. Can someone open an annuity who isn't rolling over any money from an asset and they just want to fund it themselves? Yeah, I helped the guy do that last week. Is there a minimum cash requirement to open the annuity? It's for Athene, it's 10,000. But for companies like NLG, You could do something for as little as $100 a month.
Yeah, I know. I saw that. I asked the same question.
No, it's all good. That's good. I appreciate you asking questions, Tiffany. I appreciate everyone for asking questions. Questions are good. Does anybody have any other questions at all?
Can you, I don't know if you probably don't want to get spammed, but could you like drop your number in chat so we can get a hold of you if we have someone interested?
Yeah. So here is my number. Okay, and then here is my email. Yeah, so if you run into the situation where someone has some money laying around, you're on a life insurance call, sell them the life insurance. Do not get sidetracked. Like do your job, and then when you come to solidifying that deal, be like, hey, yeah, by the way, you mentioned to me you had that money sitting there. Would it make sense to show you somewhere where you can have the grow the crap out of it and you can't lose anything? Awesome. Let's schedule a call. And you just give myself a call, text me, say, hey, I have this person, here's the situation. Uh, Schedule the call for tomorrow at this time. Are you available? If not, let's find the best time to get that call done. But yeah, text me, send me your name so I can save y'all as a contact. Um, but yeah, that's been about our time here. It's about an hour. I appreciate everyone for hopping on today. Does anyone have any last questions?
Yeah, is there any financial suitability?
Yeah, so there's suitability. So for example, like with Athene, if your net worth is under 100K, we can only put in up to 50% of your net worth away into an annuity. If your net worth is over 100K, we can only put in up to 75%. So like we can't put someone's whole entire net worth away into these policies. So that's really the only type of suitability there is.
Is there a way to up your commission from the 5.75? I know you said initially.
Yeah, once you are at 100%, I mean, once you are at 100K of assets under management, then you get bumped up to 6.5%.
Okay.
And then Jay, text me your info, bro, and I'll send you over the commission schedule for that.
Awesome. Yeah, I'm doing the whole life right now, obviously, but my goal is to eventually, once I have a team, have them doing the whole life and then start my own kind of specialized team for IULs and annuities specifically. It's
But
kind
yeah,
of
I
my
mean,
plan.
any
So,
call you're on right now, like even today, ask them the question, what do you have that acts as life insurance that would pay out to the family? Any IRAs, 401ks, what do you have laying around? Ask them that
okay.
question like today, and then you have
Right.
no idea the type of things you're going to run into. If you ask that every
Perfect.
single phone call, I guarantee you at least one out of every five people have money laying around that they don't know what to fucking do with.
Yeah, I can think of several calls off the top of my head from the last couple of days where they've even mentioned that, and I just didn't notice anything about it. So
It's
I'm gonna
money on
call
the
them
table.
back.
So like if there's six figures on the table, we might as well go ahead and snatch it up. Or somebody will. All right, hey, well, I really do appreciate all of you guys. Have an awesome rest of your Tuesday. Let me know if you need anything. Sorry for the low energy. I just you could hear I feel like shit, but God bless y'all. Have an amazing rest of your day, and we'll let's get after it.
You as well. Appreciate you.